space vehicle pre-count operations will start on my mark at 5, 4, 3, 2, 1.
What's going on, traders? Hope everybody's having a great weekend. It is Saturday, August 19th, and we'll be doing an analysis of the S&P 500, the Spider ETF. We'll be looking at the macro charts as well as looking at a daily plan for Monday the 21st. Some areas where we may want to engage the market, manage our risk, and possibly what to expect. But before we get into that, as always, this video is for educational and entertainment purposes only and should not be viewed as financial advice. So let's go over the economic calendar and some events that we may want to keep an eye on for next week. One of the big things, of course, we'll be watching is NVIDIA is reporting earnings on Wednesday after the bell. So it will be interesting to see how the markets react to their earnings. But other than that, as far as economic events, we do have a pretty light schedule ahead. We do have initial jobless claims on Thursday and Michigan settlement on a Friday, pending new home sales on Tuesday. But besides that, really not too much to go over as far as economic events. So with that being said, let's take a look here at the daily chart. And actually, let me flip over to the weekly really quickly. The main thing on the weekly chart I wanted to point out, we had come in, retested the megaphone channel trend line here that we have been watching. Slightly, we tried to break below, but they were unable to. Bears were unable to have any follow through here, and we just peaked right below. We didn't actually tag it. I believe the low was 433. 433.01, and we just almost came into the weekly 20. However, we did close underneath the weekly 9, which is sitting at 441.93. So we do want to keep an eye on that level to see if bulls are able to recapture that level coming into next week at all. Certainly a little far away, but of course they certainly can do that. We did come into this next area of of demand liquidity here, and we closed basically right inside of it. So that 434.60s that did hold up for us. And we were talking about potentially seeing a bit of a green day for the bulls after 3 days of selling coming in, and we did get that. However, in my opinion, it was really a weak showing from the bulls. We did not close back over the daily the daily 50, which I was looking for to see if the bulls could do that. Unfortunately, we did not. Unfortunate for the bears at least. But the 50 is actually sitting right at 141.50. I believe we said the weekly 9 was 151.60 or so. So let's just keep an eye on that general zone with nice confluence, potentially on a recapture of both those moving averages, right? So other than that, not too much else to go over on this chart. We pretty much are just the selling is continuing, and I was hoping for a little bit, at least for the bulls, a little bit more of a push higher. As I mentioned, I was kind of postulating that we might close up, a green day, but up maybe 0.25% or 0.35%. We didn't even get that, only closing up 0.05%. We were green by 21 cents, right? Final print came in at 436.50 with a little end of day rally on Friday, and of course it was OPEX, so it was pretty slow day overall. Okay, I had a sip of my beer here. It is Saturday night after all. All right. All right. So we still are looking at these oversold conditions here on the daily. One encouraging thing for the bulls, but weekly certainly has got tons of room down. We'll jump back to that real quick. Tons of room to still come down here and reset from a weekly perspective. So still plenty of potential downside in the works. But at least we are oversold on the daily if you are a bull. Personally, I still think we could see next week a little bit more of a rally, but I might look into another swing short if we do get a strong counter trend move, depending on where we come up to, maybe even up to that weekly 9 back test. I might look at something like that and swing some monthly September puts, but we'll see. All right, let's go into our bigger picture fibs. Nope, wrong one. Okay, yeah, so still just hanging out. We did not tag that 50% yet, but we will keep an eye on that. It's kind of a inconclusive close, on the trend line here. So that will be key to watch as well. Yeah, not too much else to go over on this chart. And let's just take a look at one more macro chart before we get into any other charts for Monday. And we'll be looking at our pivots here that we have been watching. And we came right into this one right here, a little look below and fail for the bears, and pushed right back up into this trend line. So, we could also just consolidate for a little bit right in between these trend lines. That is also another potentiality, but as always, we just take it level to level. All right, I'm going to extend some of these really quickly. Okay, yeah, not too much else to go over here, just other than that this last pivot, or second to last pivot, did end up holding for the bulls. All right, so let's look at some fib levels for tomorrow for Monday that we want to keep an eye on, and then we'll go into our balance zones and wrap it up. All right, so for tomorrow, or for Monday, I should say, extend this a little bit. For Monday, as long as we hold over this 435 area, this half gap in between of this balance zone, in between the 0 line and the 23.6 fib, as long as we can hold the 435, I think bulls have a chance. Now, the one thing I will mention, since this is an important level, not only a half gap here, and it's a balance zone, which we will go into here in a moment, the bottom of balance zone, I should say. Watch out for the little wicks here if we do start to break under. Wait for that confirmation, a close underneath if you are bullish or bearish. But from the bull case here, as long as we're holding over that, we do have a chance to make that move higher. And really, this 436, 80 area, 437, going to really need to see a nice strong confirmation over that, really for the bull, for extra confirmation for the bull case to be intact. So you can see here it was pushed right back up, but poof, right back down. So want to wait for real nice confirmations over both these levels for the long. So, yes, there's, of course, a few ways you can play it. You can certainly play off of Friday's lows. You can play off that 35 for the longs as well, or wait for that confirmation over 437 and then look for moves back up into potentially the 38.2 extension here, and that's really going to be what I'm going to be watching for. Even more of a a solid case of potentially being able to go long. And but as I've said before, it doesn't mean that there aren't long trades that you can take, which we had just kind of gone over. But if you really want to have a little bit more confidence in the longs, really I would probably wait for the recapture of these Thursday lows right here, right? All right, so we get back over that. Then we do have 440, big number psychologically, and I believe that is monthly hedge pressure as well. So we will be watching that 440, which, conversely, of course, you could potentially try to short up against that 437. I don't like that trade quite as much. I would rather probably look to short more so in the here at the 38.2 into that 440, maybe a starter on for a starter if we come up into the 439 on some puts, and then add into it if we come up into 440. That would be maybe a way that I would play that short side. All right, so I think that's pretty much everything I wanted to go over as far as the fibs. If we do start to confirm over that 440, though, for the bulls, probably looking for another dollar move up into the 50% retracement here. But again, can be another short area, so something to consider if we do trade up into this zone as well. All right, so let's look at a couple of balance zones here on our other chart. And we'll talk about that 435 again, of course. Let me just break it down into the 30-minute chart. We can make a case here a little bit for a inverted head and shoulders, right? Head, shoulder, shoulder. That neckline is pretty much going to be at that 437 area right here, half gap of our balance. So watch that for potential inverted head and shoulders breakout. Again, as I've mentioned multiple times with inverted head and shoulders, it's not valid unless we see a breakout confirmation over the neckline, right? So otherwise it's just a postulation, I should say. So but if we do trade back up into it, we were talking about this area where we could potentially short, right, in the Thursday lows, and that's no coincidence right here at the top part of this balance zone. So that's another short trade for you. But if we do get back over, as I was mentioning, we've got 440. We get over that, and then we're looking at 441, 430, 441.38, 441.75. Another area where, as I mentioned before, you could potentially look to take the short trade, either direct short or a look above and fail, just depending on your risk tolerance and how you want to trade it. For the bears, though, if we do talk about it, so we talked about some long areas, some areas we want to see confirmation over. We talked about a couple of counter trend short trades if we do continue up. But let's talk about breakout short trades. We start to get back below 435, and we really got to take out Friday's lows. And if we do end up taking out Friday's lows underneath that 433 area, we're going to be looking down into the 432s and the 431.15 down here. And let me just zoom out so you guys can see. Oh, no, you're not going to be able to see it there. Where that's coming from. Right here from back at the end of June. And I think we kind of went over these levels before, but you can see right here where they did show some buyers, some bidders in this area. So if we do trade into there, could be a cover area or an area where you look to flip long if you did get short under the 435 and under Friday's lows, right? So watch that. But if we do start to break underneath the 431, then we're looking for our next balance zone, and that's going to take us down into the 430s, 429, 40, 50, we'll call it. Under that 428 in the 80s, right? And if we do start to break that, look for price to come into our half gap right around 428, 427, 67 or 60, we'll call it there. So yeah, I think that's pretty much everything I wanted to go over for this video. Yeah, I think that's pretty much it. So I hope everybody has a great rest of the weekend, a great Sunday, and we'll see you on the other side. Remember, trade smart. A prepared trader is a profitable trader, so make sure you trade your plans and plan your trades. And for me, that's all I've got. Have a great weekend. Take care, and we'll see you in the markets on Monday.